Hey guys, Joseph James here once again with your nightly newsletter brought to you by schooloftrade.com. Today was November 3rd, 2009. I want to remind you guys about our YouTube page, /School of Trade. Great free resource. While you're there, please subscribe to our YouTube channel and please rate and comment on this video. Now today in the room, guys, had a pretty decent morning this morning. The market's kind of flattened out a little bit towards the end of the morning here with FOMC day coming up on Wednesday, but we were able to grab some pretty good profit out of it before and after the US Open at 9:30. $440 in the market this morning. That brings our weekly total to 935, our monthly total to 935, and of course our 120-day average right now just shy of $500 per day. And of course we're coming off that big month of October. We made just shy of $10,000 last month on only 4 contracts. We'll keep you guys posted as we make our way through the month of November. The term of the day today is momentum. We use momentum every single time we take a trade, and basically momentum is the force or the strength of the market. It uses price and volume to calculate. This momentum, of course, relies on a simple indicator on our charts. We also refer to momentum indicators as oscillators. It's used in a faster time frame for the best entries, and it's one of the final checks before we enter the trade. Essential for all types of traders, and most importantly, guys, it's very simple to use. Momentum indicators are pointed up for a long trade or pointed down for a short trade. So once again, guys, it's a simple indicator. It's an oscillator. We use it in the fastest time frame, and of course here's what it looks like on your charts. It's right there, the thick yellow line there at the bottom of your price chart there, and of course again very simple to use. Pointed up for a long trade, pointed down for a short trade. Now specifically here I want to highlight some of the most important things you want to be looking at when it comes to using our specific momentum indicator. Part of our indicator package, we want to make sure we're using it correctly. Now of course on the left side of your screen we'll see for a short trade. On the right side of your screen is going to be the best for a long trade. Now, watch for divergence here. We want to make sure we're watching for, another key word here is divergence, right? When we see momentum rising and price falling. So this term divergence is used to describe when we see price moving in one direction, say price moving up, and the indicator moving in the opposite direction would be down. That would mean they'd be diverging from the center. How do we use this valuable tool? Well, for a short trade, very simple. I want momentum to be pointing down. Now, it's important that we realize there are a couple different ways that momentum could be pointing down. There's the first example, of course, on the left side here, which of course where we see a curl over from the top. Price goes into overbought territory in the green. It then curls back over. The momentum indicator points back down. That is ideal for a short position. That means that, of course, momentum went all the way to the top and now is beginning to curl back down, and now we can of course take a short right here in hopes that momentum will continue to push this thing all the way down. Now you want to beware on the right side of this example where you see momentum of course has curled all the way down, is now in the red column there at the bottom. That means oversold territory, and basically what that means is it's like throwing a baseball up in the air, and when the baseball gets all the way to the top of its peak and then comes all the way back down, by the time the baseball comes back into your hand, right, that is when momentum is basically at zero, right? It's went up and came all the way back down. So we want to be cautious taking short trades when momentum is already oversold or already into that oversold territory in the red. Now let's shift our focus over to the right side of my screen. This is for a long trade. Now of course for a long trade, pretty much the exact opposite. I want to see it curl up from the bottom. So it goes down into oversold territory, then curls up from the bottom. And of course when it curls up from the bottom, we want to then be getting into our long trade. We don't want to wait to get into that long trade when we see momentum all the way stretched up to this green area here, which is overbought territory. So for a long trade, I want to see it curling up from the bottom. For a short trade, curling down from the top. And of course beware of overbought and oversold territories, and always keep an eye out for divergence between the two, right? Momentum going up and price action going down. And as always guys, we're going to show you how to use momentum live in real time in our trade room. Come out and join us tomorrow morning at 7:45 Eastern time. Of course 7:45 we open up. We'll be in the room till about 12:30. Tomorrow is a Wednesday, so we don't have any free webinars tomorrow. We do free webinars every Tuesday and Thursday, 11:30. Today we did one in the room on one contract trading. And of course, you can always grab a copy of the beginner's course to give you guys some more information about how we trade in the trade room. Let's look at some of the trades we took today. Here in the crude, it was kind of one of those days where we had some good volume, but it didn't last very long, and things kind of went a little bit sideways here early. Probably in anticipation of FOMC day tomorrow, but nonetheless, able to grab some pretty good profit out of it. Now this in the crude oil was our first trade here today, just before 9:15. Now as you guys have heard me say before, we always love when we have a pre-market trade that goes in our direction because it kind of pads our account for the morning ahead. Now in this particular pattern, we were looking originally here for a breaker short. We had seen price break that low of the day there, just below 76.50, or trying to break the low of the day. We saw double bottoms, and of course, we saw the exhaustion pattern show up to the sell side. So we're watching as the sellers begin to run out of gas. Now, we were looking again, like I said, for a breaker short. We did not see the criteria we need to take a breaker short into the low of the day. We needed to see increasing green pace of the tape on our indicator. So the pace of the tape indicator did not confirm the green pace of the tape, at least not when we wanted to see it, so we chose to be a little more conservative and stay away from that breaker short. Remember, at the low of the day, we typically see the breaker shorts at the lows of the day tend to hold if we don't see some strong price action. We didn't see the strong price action, so we immediately began to look in the opposite direction for a two-step long. One of the best parts about our methodology, guys, universal patterns, they work on any market, but anytime we have a breaker short, I can always be looking for a two-step long. So almost every move will end up showing me two potential trade patterns here. So the breaker short was disqualified because we didn't have the green pace of tape. I looked for the swing high, and then of course the break of that swing high above the breaker long for a potential for a two-step long entry. Well, we got that just for 9:15, 12 minutes past 9. Entry here was at 76.70, and you can see how we have that horizontal blue line there just above yesterday's low of the day there at 76.66. So, of course, you had 67 was the swing high. We got filled at 76.70. We took 4 for our first target, 8 in the second target, and we trailed our stop to lock in 3 more ticks for the runner. That totals 19 ticks there on that first trade. Now, if you guys are with us this morning, I think everybody in the room this morning took that one. It was called live in real time, plenty of time to get in it. We knew exactly what we're looking for ahead of time. In fact, I said exactly, if we don't get this breaker short, we'll look for the two-step long above the 66. And of course, it came right there shortly thereafter. I think pretty much everybody grabbed some profit on that one. We weren't done there yet. It was about almost an hour later. We had to wait, of course, to get through 9:30, and then we began looking for patterns again. Now, the gold turned into pretty much a nightmare after 10:30, but we were able to grab this move just before that happened at 10:28 here in the gold. Now, if you'll notice here, we had somewhat of a flatline market here until, of course, just about 10:25, 10:30, this thing started to get a little bit funky on us. 10:28 on the gold, a breaker long. Entry here was at 63.5. This, of course, was just above that horizontal blue line at 3.2. So 1063.2 was that horizontal blue line. You'll notice how we mark up the swing high. The first swing high above that red line, just shy of 63 even. And once we saw a break above that swing high, we had enough room to get in before 64. We took the trade with confidence. Momentum was curling up, and it turned into a nice, big, strong move. We took 4, 8 ticks, and then 9 ticks in the trailer for 25 ticks. That puts another 25 ticks in our pocket. And as you can see, guys, this is how we got to those 44 ticks today. 25 here on our gold, and then, of course, 19 ticks there on crude. So only 2 trades it takes to make over a 10% return on your trade account. That's right, guys. All you need here is a $4,000 account. And, of course, we made over $400 today, so there's your 10% return on only 2 trades. You'll notice, guys, I also want to show you here a good example on gold. This is what we call high-frequency trading. Now, notice how at 10:30 we broke above the high of day. Now, we had today's high of day, and then we had yesterday's low of day at 66.9. So we had 2 high of day, low of days there, 2 very important levels. And once we broke above that level there at 10:36, you'll notice something very significant here. We had high frequency trading, which we call HFTs, and black boxes stepped in. So you want to be careful. Always kind of interesting to see this stuff happen on gold, and it always happens around important levels. So be careful when you see stuff like that, guys. Be very careful when you see those HFTs, the black box systems come in and start peppering these markets with buy orders. Never a bad thing to take a break real quick and kind of wait to see this thing happen. And that's exactly what we did. We took a couple minute break, waited to see this HFT situation get behind us, and then we looked for more patterns. Nothing came our way, though, before we went to a webinar 11:30. But, guys, finished up a great day in the market today. Let's recap. Live trader opens tomorrow morning, 7:45 Eastern Time. We'll do free webinars on Tuesdays and Thursdays. We'll give you a free 3-week trial to come on and give us a try. And guys, the beginner's course is highly recommended for all free trial members. Please rate and comment on this video. And guys, for lifetime membership, drop us an email, sales@schooloftrade.com. My name is Joseph James. Hope the video helps. See you guys tomorrow morning in the trade room, 7:45 a.m. Don't miss a tick. Bye-bye for now.